If you need this month's trades to pay rent, you already lost. It's a harsh truth, but in this explainer, we are tearing down one of the most dangerous fantasies in the retail market. We're talking about traders who are literally one bad week away from missing rent, yet they're out there clicking buttons as if that pressure doesn't exist. Financial desperation is, without a doubt, the single fastest way to completely destroy your performance. Why? Because the very second you rely on the market for your basic survival, your brain literally shifts gears. It abandons calculating statistical probabilities and drops straight into pure, unfiltered survival panic. You're no longer looking for an edge, you're fighting for your life.
Just let the weight of that sink in for a second. When keeping a roof over your head or putting food on your table depends entirely on eking out a statistical edge in the markets, you completely strip away your ability to be objective. People often trick themselves into thinking the pressure is going to make them sharper, right? Like it's going to unlock some hyper-focused sixth sense. No way. It just makes you desperate. By trading with your back against the wall, you are practically guaranteeing that anxiety will force you into terrible decisions, completely overriding whatever strategy you initially promised yourself you'd follow.
We have all seen the toxic social media fantasy. You know the one. Some influencer telling you to quit your job today, move to a beach in Bali, and pull in 10% a day while casually sipping a margarita. But the brutal reality of trying to force a living out of an underfunded account is completely different. It looks a lot more like staring at glowing screens in pure, isolated anxiety. It's that gut-wrenching realization that if you hit a perfectly normal losing streak, you might actually get evicted. That is not financial freedom. That's a prison.
So why do so many of us willingly step into this nightmare? Well, it boils down to the dopamine trap. The underlying data reveals a pretty harsh truth about this industry. Most retail traders aren't actually aiming to become disciplined risk managers. Honestly, they're just desperately searching for a fast exit from a 9-to-5 job they absolutely hate. When you are deeply unhappy with your daily grind, you become incredibly vulnerable to the illusion that trading is this magical, easy escape hatch. It gives you a massive dopamine hit when you win, which totally masks the reality that you're essentially just gambling, but calling it a profession.
Let's walk through this terrifyingly predictable psychological spiral together, because I know some of you have been here. Step 1, a completely normal market pullback happens. That's just basic statistics, right? But step 2, because you actually need that money to survive, rent panic kicks in. Step 3, your brain completely overrides your trading system. You widen your stop loss because in your head, you literally cannot afford to take the hit. And step 4, the loss hits anyway. It's bigger than before and it triggers a massive, desperate revenge trade. You throw all logic out the window, desperately trying to claw back your survival money until your account is completely vaporized.
And this is where things get super specific. Think about a trader using a fixed 0.05 lot size for absolutely everything. This highlights a very specific, almost tragic retail mistake that is born entirely out of desperation. Why do desperate traders do this? Well, they'll take a 1-hour time frame trade with a 0.05 lot, and then immediately take a 5-minute time frame trade with that exact same 0.05 lot. Statistically, that makes 0 sense. The stop-loss distances are completely different. But they do it anyway because they have a rigid monetary target they have to hit to pay their bills. They aren't trading the chart anymore. They're trading their own financial anxiety.
Now, there's also this dangerous misconception that shifting to algorithmic trading is the ultimate fix. Like you can just fire up an expert advisor and let it print your rent money while you sleep. Listen, you cannot print money. Even the absolute best algorithmic systems out there go through agonizing weeks, sometimes months, of sideways movement and drawdowns. So if your rent is due on the 1st of the month, and your trading bot is right in the middle of a totally normal 2-month drawdown, what happens? You panic, you intervene, you manually pull the plug right before the system naturally recovers.
Okay, so if relying on the market for your basic needs is a guaranteed path to failure, we really have to ask the big question. How do you actually survive? How does a trader stay in this game long enough to reap the rewards without their mind turning to absolute mush from the stress? Let's pivot away from all this psychological destruction for a minute and look at the actual proven blueprint for long-term survival in the markets.
The financial structure of people who truly thrive in this game might surprise you. It is built on a multi-pillar safety net. The traders who survive over the long haul are the ones who never, ever depend on trading alone. Look at it this way. Maybe 50% of their income comes from a stable day job or a traditional business. 30% comes from long-term, boring investments. 10% from a side hustle or digital products, and only that final 10% comes from active trading. When you blend your trading in alongside other stable streams of income, a bad month in the market is just a statistical blip. It's an oh well, not an eviction notice.
And that brings us to a massive, fundamental reframe of this entire profession. Trading is a supplement. It should absolutely not be your baseline survival tool. If you are currently scraping by, trying to pull your electricity bill out of the S&P 500, your psychology is already broken before you even click buy. The most successful operators out there view trading as a powerful supplement that sits comfortably on top of an existing, stable income. Honestly, that is the only way you can execute your system with cold, calculated precision.
So what does a healthy progression of profits actually look like? According to our sources, you don't just jump from a $500 account straight into a mega mansion. That's a total myth. At first, your system is just a tiny supplement. Maybe it covers a week of groceries. That's a huge win. Then, as you compound and scale up, maybe it pays for a flight, later a nice vacation, and eventually, you take those profits and funnel them into safer long-term investments. You build a massive, undeniable cushion long before you ever consider letting trading pay your rent.
We all know the old saying, right? Don't put all your eggs in one basket. But in this context, we aren't just talking about diversifying your currency pairs or your stock portfolio. This is the ultimate life structure strategy. You simply cannot put all of your life's financial weight onto one single trading strategy. The entire macroeconomic environment could shift tomorrow, which could render your specific edge totally useless for a full year. If trading was your only basket, you are literally out on the street.
Let's put these two mentalities side by side. On one hand, you have the survival trader. They rely entirely on pulling daily profits from the market. Their stress levels are crippling, their execution is constantly hijacked by their emotions, and they are forever tweaking their system out of pure fear. Now compare that to the supplement trader. They have a day job, they have investments, and trading is just an extra financial pillar. Their stress is practically zero. Because they don't need the market's money to eat that week, they follow their rules flawlessly. Who do you think the market is actually going to reward at the end of the year?
So how do we actually apply this zero-stress state of mind starting today? The mandate from our sources is crystal clear. Reduce your risk. You need to drop your risk levels down so incredibly low that taking a loss provokes absolutely zero emotional response. If a perfectly normal losing streak makes you want to smash your keyboard or start praying to the trading gods, you are risking way too much. Your risk has to be so small relative to your life capital that you can literally watch a stop loss get hit, say, oh well, and just go make a sandwich. That is what true control looks like.
All right, let's lay out your exact blueprint for escaping this desperation trap. Number 1, drop your expectations right now. You are not getting rich overnight, and that's okay. Number 2, build a real financial cushion through a job or a business before you ever start sizing up your trades. Number 3, and this one is absolutely crucial, you have to start thinking in years, not months. A solid system is judged over an annual sample size, not by whether it magically paid your rent this November. And finally, number 4, ignore the toxic influencers. Seriously, just mute anyone selling you the fantasy that you can quit your job tomorrow with zero effort.
Good trading comes from a clear head. A clear head comes from not needing this month to work. Once you finally realize that you no longer have to carry the crushing weight of your basic survival on your very next trade, literally everything changes. You stop forcing subpar setups. You stop panicking during normal drawdowns. So I want to leave you with this. Is your trading account built to supplement your life, or are you desperately hoping it will save it? Fix your baseline first, and only then let the market do the rest.